So yesterday morning, we had a great panel talking about the big global trends that are impacting on payments. Today's panel is focused on, so what are we as South Africans doing about it? I must tell you that one of the things that really stood out for me yesterday is just quite how difficult and incisive the questions are that this audience can put forward. There were a few panels where I sat and I thought, well, I'm glad I don't have to answer that. So we will see who can bring the most challenge to this conversation. I think it's a great opportunity to ask the questions we haven't asked before. We have three of the industry leaders who are very at the heart of the changes that are taking place in South Africa, and the opportunity to engage with them and hear from them their experience and their personal views on it. So really looking forward to this panel and privileged to have the three of you joining me. Thank you. Pradeep, I'm going to start with you. The Reserve Bank has done a great job in designing and standing up the payment ecosystem modernization project, easier to say PEM. And you've spent a lot of time engaging with the industry on it. In many respects, I feel like it almost started at PIPC 2 years ago, where Kuben spoke about getting more involved in the operations of payments. With a bit of time passing, are you happy with how this has progressed so far?
Simple answer, no. Why did it take us 2 years to get approval, sign off, and in reality today I'll be signing a check. I don't know who's going to process it. And I'm not sure I'm going to get the zeros right in that check to buy a stake in paying. So from a pace point of view, it's taken us a long time to get to where we are. The reality, though, is that if I look back from where we started, we have made significant progress. We're on the cusp of a whole range of delivering the things we've been talking about for the last 2 years. Arif said yesterday, hashtag next 2 weeks. Well, in 2 weeks' time, you should see the latest draft, which we think might be the second to final draft of the licensing framework for payment service providers in this country. And you'll see in that draft, we actually are listening. We're hearing the messages we're getting, and we're responding. Yesterday, we got the final competition sign-off from Eswatini. South Africa gave us that 2 weeks ago. So we now have formal approval to acquire a stake in Pay Inc. So before the end of this month, we will own 50% of Pay Inc., and Pay Inc. will be repurposed to be a national payment utility. The QR Plus code standard is being simulated. 10 of the market participants are already engaging in the simulation. So we're close to finalizing that. We've made decisions around what the future architecture of the payment ecosystem of South Africa should look like. A unified payments platform, something that PASA had done work on years ago, will bring to light. So some good work. I'm not sure it should take us this long. If we all agree it's the right thing, it should not take us this long to do it.
And that kind of leads me to my follow-up questions on this. So is there anything that has surprised you in the journey so far, aside from the time it's taken? And have you changed any of your original thinking as a consequence of that?
Yeah. What has surprised me, I've spent the last 30 years working in the public sector, and we've been accused of being bureaucratic, full of red tape, and we take forever to do things. What has surprised me is the big financial institutions of this country are more bureaucratic, with more red tape, and less agile than we are. Yeah. So that has surprised me. And it changes the paradigm that the public sector can be very, very agile. The second is that I've been so surprised when we speak to institutions, and we speak to different divisions in the institutions, and we speak to individuals in the institutions. My concept and my paradigm was they are homogeneous. They speak with one voice. At the SARB, we are absolutely bound by that. You know, when the MPC makes a decision, they do state that 4 voted for and 2 voted against. The last decision, that was what the voting was.
Yeah.
When they walk out of that room, after they've voted and they've made the decision, none of them, after that, talk about, well, I voted for a bigger reduction in the interest rate. They only talk about the decision they made. That's not true. Not with all of you. It's a serious problem. The next lesson I learned is, in principle agreements, in writing, is never what they seem they are. 2 weeks later, it's very different. So the thing has come to, over 30 years I've learned this as well. Why take the simple route when we can make things difficult and complex? So no one looks for the simple route. The last one, and it talks to some of the survey you asked there just now. When I talk to 10 people, 7 will tell me why I should not, could not, and why it is absolutely wrong to do something. 1 will be totally silent and never say anything. And 2 will figure out ways to say, well, here's how we can do it. Or, here's alternatives. Very few give you solutions to problems. But they're very good at raising the problems. So those are the lessons. What has changed from original thinking? One fundamental thing changed. From the first time I stood up and spoke about PEM and said, this is what we're going to do. When I first talked about it, we said we will provide a store of value as part of the utility. That is the fundamental thing that has changed. It's the only fundamental thing that has changed. The other big issue that we've changed our thinking around is domestic cards. And we've waxed and waned around that. But everything else, we've been absolutely consistent about what we said 2 years ago and what we are delivering today.
Thank you, Pradeep. Yes, that kind of creative tension in the industry with differing voices, sometimes in the same institutions, in different divisions, does add a very different flavor, I think. And it has pros and it has cons. And I think what we seek to do as a community is to harness those different thinkings into ways that perhaps can give us more richness and more depth in the end solution. So I hope we can make positives out of those as well as finding those as challenges. Thank you. That was a very direct, very strong reflection on how you have experienced our industry. Lincoln, I'm going to turn to you, perhaps as one of the people who's kind of influenced by the changes that are coming. And I'm astounded by how almost every second day I read something, whether it's in the press, whether it's on LinkedIn, about how payments are being thrown open to non-banks. Are they?
One of the things that I guess we are going to have to learn is to change the terminology. When you are called non-something, there are fintechs, there are telcos, there are retailers, there are paytechs, there are insurtechs who are playing in this space. And they're hungry for change. They're waiting on the outside. They've got the capabilities, they've got the experience, expertise, and what the regulators have done is to clear a path and give a policy direction. It's for the market then to play. And what you've seen is the market is responding. Every other day, you're hearing new announcements. Nobody's staying in their lane. You hear a grocer saying, I'm going to start a bank. You hear an insurance company saying, I'm going to start a bank. You hear banks buying fintechs. You hear fintechs buying banks. Market's not waiting. The market has already got the signal. from Pradeep and team. And those who are forward-thinking have got all their ducks in a row, planning in detail as to what's going to happen when those announcements are made. Those who are still wondering whether will be left behind because it's been 2 years. 2 years is too long. So those of us who've seen the signs have started to think about what is possible. When I engage with many of my colleagues in the fintech environment, there's expectance of change, and people are making changes in their environment to prepare themselves for what's coming. To try and wait for every T to be dotted and every I, it's not going to work. We are in the market. We don't expect the regulators to be market participants. We don't expect them to give us direction about every solution. We expect them to create a framework. I think the 90% of the framework is clear to us before the announcements are made. We've made propositions, we've made suggestions. We have a sense that we've been heard, and I think there's a lot of excitement about what's coming. And I think each organization is just going to look at itself and ask itself, are you ready? Because the painful part for me is that we remain one of the most unequal countries in the world. We have an economy that's had pedestrian growth for the last 30 years. If we can't change that, we're looking at a crisis. This gives us an opportunity to open up the environment for innovation, competition, and serve the underserved. That's what excites me.
Thank you, Lincoln. That was also a very definitive and clear answer. Do you see now I'm trying to think of another word, as a fintech who's just in the process of buying a bank license, or a bank with a license, do you see the rise of payment-only banks or largely payment banks?
I think that the industry will not be defined by the rules of the past.
Yes.
The industry will be seen within the framework of the future and the new, because the activity-based regulation that's coming enables anybody to be anything. So if I'm a retailer and I want to play in the system, I'll get the license that's appropriate for what I want. If I'm a bank, I'll do that. If I'm a fintech, I can buy a bank can buy a fintech. That's the glory of the kind of reimagined industry that we have. That's what excites me. So the labels, they're for beer bottles. The labels will come. What's important is what do I do and what value proposition do I have for consumers and for merchants. If you've got that, doesn't matter what you get called. So in my environment as Lusaka, we're not going to be a bank. We will hopefully, when the regulatory approvals are done, have a bank in our stable. Like we already have an insurance in our stable. So the labels themselves will not be as important than what value proposition do you give to the customer and can you compete?
And that ties in beautifully to the closing comment of yesterday's panel, when I said to the guys, so what advice would you give to the commercial entities in this room? And they said, look to your customer.
Absolutely.
So thank you for pulling that one together. And speaking about customers, Steve, congratulations on the deal finally being approved and getting out of this kind of almost twilight zone you've been in, where you know the world is going to change, but you can't talk to the SARB in any meaningful way because of the competition requirements. We've seen you make material progress anyway in Bank South Africa, rebranding into Pay Inc., and congratulations as well on that. But the real question is for your customers and your stakeholders, what do you think they are going to experience differently from you in this new world?
Thanks, Gita. I think unquestionably the subscription by the SARB is going to be a catalyst for change for us. It's not the only change that we have to pre-position for. There's, of course, the more deterministic posturing coming from the SARB through things such as the PEM. Is what Lincoln spoke to in terms of the new regulation, and I think also he touched on it, is the economic reality South Africa finds itself at the moment. So I think if we take all three of those into consideration, the fundamental changes for us that will impact our interactions with customers are as follows. Firstly, we will become the national payments utility, and so through that become the vehicle under which the SARB will exercise its modernization and digitization program. The second is that we will be, and we are now, deliberately targeting economic growth and financial inclusion as an express goal, as opposed to a consequence of things that we do. And then lastly, we will move from just being an operator for third-party schemes to becoming a collection of schemes in our own right. And I think that change from operator only to operator plus scheme is quite a change for us. So that's perhaps what the customers might experience us differently from. But I think in a word, how I would want them to see us differently is fundamentally more intentioned. We, through what I've said now, is what we're looking to do. We've discussed why we're wanting to do it. And so I hope all the actions that we do take from this point on in 2 weeks' time will be seen through that light, Gita.
And Steve, do you see your stakeholder group as changing as a consequence of this change to a national payments utility?
Yes, I think certainly the change in the regulation directly exposes us to new parties in different roles. But it also requires a rewiring in the internal fabric, because it's not just who are your customers that we engage with, it's who are the beneficiaries of your customers' products. And so we're not just thinking about what we produce for our customers, we're actually thinking of the end product to the end consumer. And so we're having to design our solutions with that in mind. And that's how you have to operate a national utility. You have to have a much more expansive frame of mind.
Thank you, Steve. We spoke quite a lot yesterday about new technologies, the threats and opportunities that they bring in, the challenges that they bring to the payment system. And we heard from Australia around what they've done in terms of dramatically cutting the impact of scams. Are we doing enough in this country?
Sounds like a trick question. I guess obviously the answer is no. But perhaps the way I would frame it is as follows. Firstly, things like fraud, scams are really, they're not stochastic anomalies in the system. In fact, they are features of a digital economy. And secondly, it's not sufficient for us to design a robust system. We have to, and I take a literal page out of Nassim Taleb, we have to design one that is anti-fragile, so one that learns, reconfigures, and becomes more resilient. And I think we are starting to do that. If I give 2 examples of where we are taking on this more anti-fragile posturing, the one would be within Pay Inc. itself, where we run a centralized fraud management capability. It's effectively a machine learning tool that detects anomalous transactions and reports them. But what it benefits from is the reinforcement learning that happens when our customers report actual fraud events, and we can update the model. And so it becomes stronger through those practices. The other big step, and I think it is something that we have started to mirror what Australia has done, is the proof of concept to build a national scam center that's currently being run by BASA and SABRIC and SAPFs and Pay Inc. and the SARB and many others. And what's excellent about that, again, in the anti-fragile concept, is that we're centralizing the industry data. And so the system becomes stronger because of incidents of fraud as opposed to just in spite of it. And so where we constantly collaborate to bring these types of responses together, I think we are moving in the right direction, albeit it is never complete.
And are you getting the right support in terms of the data that you need for those environments, or do we still see things like the regulation as being a challenge to the necessary sharing?
Yeah, I think there's the inertia that one does have to break. So I think the first regulatory hurdle is often papaya, and so there's a concern around sharing data. But I think those are all surmountable. When you see the public good that can come from these things, it does supplant sort of narrow regulatory frameworks that actually weren't intended to capture those types of elements. So it has taken us a long time, I think almost the best part of 2 years, to get to a point where we are getting more consistent reporting of these events. And I think it's because of the enormity and the risk that sits in the market if we don't collaborate.
Thanks. Lincoln, I hear a lot of talk in these new frameworks and these new models, and obviously the regulation is based on managing risk. But I hear a lot of talk about how new entrants are potentially a weak link in the system. What is your answer to that?
You know, there was a very interesting SARB conference, I think, last year, and the representative from Kenya was describing how, at the beginning, they were trying to think about how to regulate M-Pesa. And they were worried about money going to the wrong place. Now, the regulator said, they were asked by M-Pesa guys, have you ever got a text that's meant to go somewhere else come to you? And embarrassingly, the regulators would admit that the text goes to the right person. It's a movement of data. Money is the same as data. So when you're trying to regulate, accept that those parties bring a particular expertise. Not all players don't bring expertise. So retailers are good at certain things, telcos, fintech, and whatever. Create the framework for risk management. Give them a sense of the appropriate measures that are there. Make sure that they also have got eyes on risk like everybody. Suddenly, the environment is changed. But if we just base it on perceptions that you are likely to be more risky, it's a dialogue that's going to help anybody. But if we co-create the risk framework, the accountability rules for everybody, non-banks, that's what we're called, will participate fully in those. I have a sense that there will not be weak links. I think that we design the system with the right rules that look for both innovation and risk management. It's two sides of the same coin. If we do it that way, all participants come into the environment with that in mind. The same way as when a new bank participant comes in and gets a license. There's the same view from the established banks to say, what is that? But if there are rules that are designed, that person comes in with those rules. So define the rules and the accountabilities for everybody, and we all participate. Not this thing that you are new, therefore you are likely to be more risky. I don't think that's a helpful discussion. I think what's a helpful discussion is define the rules for everybody. And I think when we were looking at the draft regulations, we could see the thinking that says this is what's required from a management point of view, this is what's required from a risk point of view, the tech you should have, the management, the cash, stuff that you should have. All of those things are defined. If you fit those, you are in. And I think that's the kind of conversation that should have, rather than you're going to be a weak link. Then it becomes accusatorial and not helpful. So let's define the rules, and I think players will be willing to play.
Talking about risk, Pradeep, one of the questions that's come from the audience, which relates to a lot of discussion yesterday about geopolitical risk, domestic schemes, etc., is a question around how the thinking has changed around a domestic card scheme from the original approach and why. You said you were vacillating on it, which was kind of not terribly clear which way, and perhaps you aren't clear on it, but if you're willing to share some of that detail, please.
Yeah. It's not a surprise to Stephen, because I've said this to him recently. And I know we really were keen on a domestic card scheme. And not from a domestic, from a sovereign risk point of view. I think sovereign risk must be dealt with through a licensing framework that says if you operate in this country, mitigate sovereign risks. And it's your job to mitigate it. It's not our job to tell you how to mitigate it. So you all are international players. Figure out how you mitigate the risk. The domestic cards is really driven by we have a unique market. We have a very deep penetration of debit card in this country. And in reality, it is driven by social grants.
Yeah.
That's what's driven deep penetration of debit cards. But it's not used for transactions. It's used to access the funds. You know? So if people are already accustomed to card, and they can use it, our thinking is, how do you develop a form factor that includes card as part of the PayShap? How do you access PayShap using different form factors, one of which could be card? Yeah? And that is where we're thinking around it. So there's a notion that the future of payment rails, when we think about it, you talk about EFT, talk about fast payment, retail payment, you talk about card, but everything is going to be almost instant payment, right? All the different rails. You're going to start seeing convergent of rails. In PayShap, we're thinking about building PayShap. I mean, Stephen is thinking about building PayShap as part of a roadmap already agreed to amongst the participants that says that we'll sunset this, we'll sunset that, we'll collapse it all into this. PayShap will go from 1 rand to 5 million rands with tiers in it, with the necessary checks and balances and rules and regulations. So form factor becomes important around how. So QR, using your card, using your cell phone, using your fingerprint to initiate a payment are things we have to think about rather than just purely saying domestic card is a card scheme on its own. And I think that's where we are kind of shifting towards.
So to put a label on this one, sorry, Lincoln, what we're effectively saying is that PayShap is the domestic scheme.
Yeah.
Or to put a headline on it.
Yeah.
One of the things that we at PASA have written quite a lot about and feel strongly about is the extent of the change that we are driving into the South African payment landscape in a very compressed time frame. From the institutions, the regulation, the commercials, due to the interchange work that we're doing, it's all, and the payment systems themselves are all kind of intended to change within a 3 to 5 year time frame. How do we manage the risk in complex systems of putting all of that change in at the same time? And I'm not sure Stephen or Pradeep who wants to take that one first. I think, Stephen, you're going to have to do a lot of the actual builds, but the change is far bigger than simply technical or commercial products that we're talking about. How do we manage that safely through the next 3 to 5 years?
Yeah, I think it's tempting to want to answer that by saying we should centralize everything and sort of run it through some industry Gantt chart, But I suspect the answer is a little bit more nuanced than just that, and it touches on something Lincoln mentioned. We have to accept that the players in the ecosystem are growing. They are no longer semi-homogeneous in the way that the banks were before. They are quite diverse. And that collective community is going to operate under a number of conditions, and we must assist in setting those conditions. And those conditions are almost setting an industry strategic intent. It's setting the guardrails, and so that might be the enabling regulation, and it's setting the most appropriate incentive construct that drives actors in the way that they respond to those incentives. So I think it's a bit of both. Some things we will need to centralize and drive through the middle. And in other cases, we have to create the environment that people can thrive sort of in pursuit of their own demand curve under the constraints and enabling factors that the environment is allowing.
And I'm going to come back to the incentives framework, because I think that's one of the big topics that came out of yesterday's panel is how do you keep the market having skin in the game and seeing value in innovating in the space? And Lincoln, I'm going to pick that up with you as well. I don't know, Pradeep, if you want to add to that question at all.
Yeah. So the one thing that we're really good at the SARB is managing risk. I mean, the constitutional mandate gives us that the responsibility to manage, because it talks about protect the value of the currency in the interest of balance and sustained economic growth. And implicit in that is financial stability, because without financial stability, you don't have balanced, sustained economic growth, and you cannot protect the value of the currency. That's now written into law. So we do that for a living, managing the risks. However, having existed for over 100 years, and since the Constitution was written and post-democracy, we are really good. The world is really good at making sure what happened yesterday doesn't happen again tomorrow from a risk point of view. So our risk kind of thinking is about we protect ourselves to make sure we don't face the same things that happened yesterday. And we never see the big risks, because all the big crises that the world has experienced in the last 30 years, that this country has experienced in the last 30 years, no one had on any risk register. So sometimes we need to be mindful of the fact that we cannot predict the future. And we must design with best intentions, knowing what we know, and put the guardrails to fulfill our responsibilities. But then when the world changes, when the global financial crisis happens, you have the ability to respond. So lots of times I don't say, when I go into a battle, I don't worry about how the other army what their capabilities are. I worry about who's standing next to me and who's got a gun next to me, because that person poses the biggest risk to me. And that person must be fully trained when under pressure to shoot in that direction. And if I've got that on my team, it doesn't matter what the opposition has, I can take it on. So when the big crisis happens, or when a risk does materialize, or something that we never thought about happens, you've got a team that can respond. You trust the team has the capability and expertise to shift, change, and protect the system from that risk. Otherwise, and I've seen it, we go down rabbit holes because we try to plug every risk that we can think of. We try to deal with every question in the detail. And sometimes it's good to say, well, good question. When it happens, we'll deal with it. Because I'm quite confident I'll have the capability to deal with it. And I suppose if you take that attitude, that kind of approach, nothing beats implementation more than talking about it and trying to design for perfection. Doesn't exist. Deal with the big issues, and the small things will sort itself out.
I am going to dive down this rabbit hole a little bit further before going into the more commercial and incentive conversation, Pradeep. And I'm going to do it picking up on one of the questions that comes from the audience, but adding my own spin to it. So one of the questions for you says, how does the SAR then plan to push the industry to embrace change at speed, considering the concentrated nature and power of some of the industry players? But and incumbents defy all labels. But I would like to add another nuance to this conversation, which is, in your opening comments, we almost touched on a breakdown in trust. And my personal view is that we're not going to be able to move forward as an industry unless we can build that trust and collaboration. And even now, we've used a very we've used a warlike description of we're on this side, you're on my side, you're not, there's no friendly fire. The big question for me is, how do we build that environment where the trust is restored and we can move quickly together? Sorry, I know that's a dinger of a question, but
Yeah. So having been involved in very significant change programs over the last 30 years, what I've learned is that what you do means more than what you say. Yeah? And so spend time on talking about what you're doing, why you're doing it, how you're doing it, and have a sufficient coalition of people who buy that vision, buy into it, and then follow that up with rapid implementation, but considered, thoughtful, and deliberate action. Because nothing builds trust more than, I said I'm going to do this, I've actually done it, and then you can start to do more. Because now people say, okay, we said we're going to do it, we had a whole lot of questions, they did it, it's working, now how do I start to, I will get more chance to do more, and then that continues to build trust. We cannot build trust by talking. We cannot build trust by agreeing. We can build trust by delivering on what it is we said we will do and staying consistent to that. But also demonstrating that in that process we listen, we adapt, we change with circumstances, and that there's good rationale and there's sufficient people that back that. And I think that is what's going to change. You know, when I started this journey, I had a CEO of a bank sit down across the table from us and tell us that you're an SOE and the track record of SOEs in this country is really bad. We're never going to be part of this because we don't want to create another failed SOE. It's the CEO of a bank. CEO of a bank. And their senior executives tells us that we are funded by taxpayers. We're not going to allow taxpayers' money to be wasted again like they have been in other SOEs. 2 years later, we've done it. Didn't change what we said. But following through and being consistent and delivering against that changes that perception. And starts to, but trust is, my starting point is I trust everyone. What you do determines whether the trust is maintained or not. So don't earn my trust, I'll give you my trust. You maintain the trust by what you say and what you do. Changes the dynamics. Yeah? Changes the dynamics.
I don't know if, because from a personal point of view, I think that building of the trust is going to be one of the critical things to take this thing forward. And it in some ways touches on the incentives, the capital, how do people choose to invest in this industry. You know, Lincoln, you spoke very compellingly about the need for people to read the change, or business to read the change in their environment and then to commit to it.
Yeah, I mean, I can only speak for my organization, where I work. We got the signal. We heard what the regulator said. They painted a picture. That picture was compelling. It was in line with what we saw. We felt they could have moved faster, which is what Pradeep was saying, and we told them that. And we had engagements. And the same urgency was being felt by other organizations where we thought we're actually competitors, yet we see the same things. And that got us to get together to build an association. And when we built that association, we went to have a conversation with Saab, told them our views, and from that day on, we've engaged. And we've given our views, and where we are, I think there's big trust because things were said to be done, and they were done. And when they were not done, we said, why didn't you do what you said? They said, no, give us more time. Then that's the thing. So I think we're all at different levels, I guess, in the industry, because the industry is not homogeneous. There are certain parts of the industry where there's high levels of anxiety about the change. There's other parts of the industry where there's high levels of excitement and expectation. I can tell about where we are at Lesaka. Our investors, we're telling them the story of this future, and they are backing that. We're bulking up our business. We're acquiring more businesses. We're bringing in talent into our business because we see what the future holds. The regulator can only set the direction. They can't define every turn. It's for the market participants to interpret what's coming and design their value proposition for that. And then let's compete. And within that competition, there's collaboration. Because in the same environment, you're going to have retailers collaborating with banks, banks collaborating with fintechs, fintechs collaborating with retailers and telcos. That's going to be the environment. What we have today is not what we're going to have next year. And if people can't see that picture, they're blind. They're blind to what is possible. We've seen it happen in other markets. What I like is one of the first things the SARB said was that we're going to learn from those markets, but we're going to develop something that's uniquely South African. And that is what has driven our passion to participate. So from either Lisaka or an ASAP point of view, we're engaged. If there are differences, we'll say there are differences. We won't say something about Pradeep behind his back. We will tell Pradeep, we agree with you on this, we don't agree with you on this. And that's the engagement that we want, a mature engagement. We've had a very good section with Pay Inc., where, again, there was a conversation where we've never been part of the conversations. We had a conversation, they spelled out their future, we've agreed what we should talk about. Again, reimagining PayShop, that's a conversation we're not to be part of. So we are future-orientated. We're not looking back at the past. We're not trying to protect revenue streams. We're trying to create new revenue streams, bring in new customers into the payment system and come with new propositions, new products, new services. That's our game. And I guess we see the world that way. And we don't judge others who see the world differently, but our trust is what is coming, is what has been being built up over the last, I guess, 2 years. So next 2 weeks, I guess, there'll be trust issues if after 2 weeks Pradeep says no, it will be after New Year. Then we'll be grumpy. But but yeah, so there's a lot of expectation and there's a lot of planning about what's coming.
I think the gauntlet has been thrown down. I see a ref is laughing. Stephen, I'm going to turn to you now with a couple of the questions from the audience. And I'm going to take two of them together. The first one says, as the payments utility, what would be your role in driving financial inclusion, considering you'll also need to operate as a self-sustainable business? And the next question is, should the shareholding in Pay Inc. be changed to give all the parties the same share of the remaining 50%? And I think in some respects, those two questions are two sides of the same coin, so I'm going to let you deal with them together.
I'll answer the second one first. And it's very tempting in these discussions to think that the shareholding, particularly its structure, drives the strategy of the company. And so I effectively want to put on record that that is not the case. So the construct that the company will form is as a national payments utility, its goal will be to execute the SARB's digitization program, and we will be pursuing, as I've said before, financial inclusion, economic upliftment. But the board that is constructed on the back of that is not structurally representative of the shareholding. It's an independent board, or predominantly independent board under King. There are only 2 of the 13 board members are shareholder appointees. So it's not really relevant whether I have a 3% or a 15% share in Pay Inc., because the strategic intent of the company is now fixed in that direction, and the board members have to make sure that it achieves that, not that it achieves its individual goals. And that probably brings us into the first part of your question, was that interplay between maybe sustainability and commercial agility versus the NPU and what is a public interest argument. Now, I don't see those two as clashing. I don't think that a balance is required there. For the most part, everything that we do will be in the pursuit of the public interest. However, if we are not agile, then we will miss the acute need that exists in South Africa today. If we are not commercial, then what we produce will not be sustainable. So I think we need both those coins or sides of the coins to be in place to achieve that goal.
Thank you. Sorry, I'm trying to, again, scroll through lots and lots of questions coming at quite a rate. I'm going to pick up this one, and I'm almost going to treat it as a question to myself, which is the conversation anchors on the changing landscape of SA payments with a panel that has the voice of the SARB, FinTech, and Pay Inc., but the voice of the banks is missing from the conversation. So I think that is very much a question to the organizers for having structured this panel the way that we've structured it. I think we have structured this very much to focus on the delta. The incumbents are the incumbents. We know what the volumes look like. It's probably a 95% around the bigger systemically important players, and we don't see that as being the primary driver of the change that we are facing, which is why we have chosen to structure this conversation this way. But I would think that everybody on this stage would acknowledge that the voice of the banks is as critical in this conversation as the voices anybody else. Again, bearing in mind your comment about labels and beer bottles. I don't know if anyone else wants to add to that one.
I think I just want to add to it, and I'll be very brief. The payments ecosystem is a network. And the way I've started to describe this, it's the other thing that has changed my picture of this, is that what we're building is we're building the national highway. So we're building the N3, we're building the N12. But the N3 and the N12 doesn't get you from OR Tambo International Airport to this venue. I need R21, I need R24,
Yeah.
I need London Road, I need Grayston Drive. Yeah? And I need whatever the side road is here. So I need all of that to work in harmony. Right? I need the rules that say that you have to drive on the left-hand side. You have to obey the speed limit, and the speed limit is different. On the R21 it's 100, on the N3 it's 120, but in some places it's 80. You know? On London Road it's 60 kilometers. But for you to get from there to here, you need all of it to work, and you need to obey the rules at different places. But in doing so, don't build the car that gets you from OR Tambo to here, where you replicate the road version of the F1 Ferrari or the F1 Mercedes. Because when you hit London Road, you ain't going to get to the Sandton Convention Center. Because when you take London Road off-ramp, it takes you directly into Grayston Drive and brings you down to Sandton. Nobody thinks about it that way. But an F1 road version of the F1 Ferrari will not make it through London Road. Yeah? By the same token, if you're driving that F1 Ferrari road version of it in Sandton, you're paying a lot of money to make a lot of noise and get you nowhere in the traffic. It's for show off. And if you got the money, pay for it. And so you got to get all of it to work in harmony, and then you got to build the vehicle that actually gets you across that. All of those roads, not just that F1 Ferrari on the N3 would be spectacular, but it's a single-seater, it just make a lot of noise, go very fast, and then you'll get stuck. So that is how this ecosystem works. So whether it's big bangs, whether it's incumbents, whether it's new players, retailers are going to enter the space with glee.
Amen.
M&Os, everyone, but it's payments. The thing about it is payments becomes a utility. Don't make money on the flows, make money on the services. Change the game.
I think if I could add, I think people have to stop this victimhood because it's not constructive. You are going to have different players. You've got to reimagine the payment system to have retailers, banks, insurgent banks that are coming from overseas. You're going to have small banks. You're going to have telcos. You're going to have fintechs. You're going to have all sorts of players. The problem of looking with the lens of the past is that you're stuck with I used to be. As the new regulations come, they define a new world where people will say, I think I'll fit into that and fit into that. So everything has to be reimagined. You can't see PASA, you can't see Pay Inc. as being what it was before. Everything has to be reimagined in terms of what's coming. And I think that's important. This is not an anti-bank thing. It's none of that. And if we can just get our mental models to a broader picture, then the network that Pradeep is talking about will come to pass. And those that are excluded, which are not, we're just the conduit. The actual people excluded are the SMEs and consumers who are not participating fully in the payment system. That's the issue. We should be more worried about them than about us.
And Lincoln, I want to pick up on that with another question from the audience, which is it's fantastic to see the energy around the intention of creating a digital economy. The ask to scale and reach to enable inclusion across different areas. What are we as a community doing to create trust in digital payments for this community? There's greater trust in physical cash, but what can we do to enable that same trust in digital payments? Commercialization is pivotal for digital growth. And I'm going to throw that to you as the one commercial player on the stage.
So some of the things I cannot answer because they're competitive. Although I love my colleagues, but I don't want to say all my secrets. But I can tell you, somebody mentioned yesterday some conversations. In some parts of the country, in my world, we're having deep conversations with actual participants about their own pain about cash. So I'm having conversations with taxi drivers who say, month end, the last trip can end to death. Because everybody knows there's a lot of cash in that taxi and somebody's going to die. It's as practical as that. There's somebody who runs a tavern who knows that when they close, somebody might come in and kill them for the money that's there. These are practical things we're trying to solve. And we're trying to solve them on the ground with solutions. Some of those things are not going to be solved at a group level. What we are looking for are the frameworks and the investment in the digital infrastructure. Once that digital infrastructure is there, let everybody play. Because from there on, the whistle starts and everybody's going to say, what alternatives to cash? Because this notion of just a fight against cash, unless we can show people viable alternatives to cash, people won't use. I'm excited, for example, about something that Pradeep mentioned in passing. 4 years ago, when I joined our organization, probably 90% of grant recipients were being paid cash in an open field in the most undignified manner with lots of security. Today, in this country, probably 80% of grant beneficiaries are paid through the banking system or the payment system. It didn't need a decree. The customers voted with their feet. Somebody told them this is cheap, but they knew it's not cheap. They said it's free, they knew it's not free. They went to alternatives. We've got to give people alternatives that make sense, and people will vote with their feet. Small businesses, if we can show them the benefits of accepting digital payments, they will do so. We've got the capability to create that environment. Why should some transactions be so expensive when they're happening in KwaMashu, when they're happening in Tembisa, when they're happening in a village? So there are certain things that I think are coming from these new rails that we're creating to make it cheaper, safer for consumers and merchants to transact.
Very quick comment. I'm picking up on Arif's hashtag 2 weeks. I'm fascinated in that we've all absolutely assumed the National Payment Act and the draft payment bill that we're working on only covers digital payments. Nowhere in the National Payment Act it defines payments as digital payments. Why don't we include cash in the conversation around payments?
Yeah.
Why do we think it as, and this polarization that keeps happening across the board, banks, non-banks, cash is not a payment. When we think about the act, we've always worked, we've all assumed it's only to do with digital. Actually, it's gonna, who's been licensing acquirers and issuers of cash? Has it ever happened in this country? It's a free-for-all. That people who rely on cash, when there's a funeral in the village and they need 15,000 rands cash to pay the service providers and cover the cost of that funeral and the food and all the rest of it. They have to travel 150 kilometers, pay 700 rands to withdraw the 15,000 rands to spend in that village. And we don't think about it. We only want to talk about payment. So watch this space. Before the end of January, we will call an Indaba around cash, and we'll talk about a complete rethink about the blueprint for cash. And we're going to talk about payments, not digital or cash. We'll talk about payments and how all of it works together in a smart cash society. And smart cash society is one that is digital and physical.
And cash.
And that becomes important.
Yeah.
So,
Now, I think we'd all agree that that cash-to-digital interface as well is an absolutely critical and pivotal moment in this conversation. Sorry, Steve, you wanted
No,
to...
I was just a closing thought. A lot of what we've spoken about here is sort of this endogenous trust. It's trust amongst the participants, but the real trust that I think we have to be concerned about is the trust that is experienced outside by the users of the sort of the payments that we provide. And I take PayShap as an example. We talk about it being sort of a low-cost, ubiquitous, rapid payments rail, but in reality, it's acquired for or through very few channels. It's, for the most part, not close to zero or low cost, and the use of it is inconsistent across all the participants, and that does not build trust.
No.
So I think going forward, I think we need to be more cautious of worrying about trust amongst the players here and about trust that we create in the digital payments products that we are purporting to produce for the customers in the market.
With the 2 minutes we have left, and I think that's a very good point, Steve, but with the 2 minutes we have left, I would like to put my own last question, which says that the PEM is a finite project. What does our payment ecosystem look like when the PEM program is finished, or what would you like to see it look like when it's finished? And Pradeep, I'm going to start with the commercial side, then move to Steve and give you the last word.
I envisage a payments future where there are different participants who bring different value propositions to their targeted customers and make life easier for consumers and merchants in an environment that's inclusive, that enables innovation and lots of competition. And that's what excites me about the future. That's what I see beyond PEM, because it's up to us. If you're saying we're relying on PEM, then we were not committed to the journey. The PEM gave us the path, gave us the framework. We must now, all of us, regulators, players, or whatever, act on the new rails that are created. So I'm quite excited about what's possible, and I hope we can go and compete and innovate.
Which sounds very close to my personal dream, which is that everybody has the opportunity to make a digital payment everywhere, anytime.
Absolutely.
I like putting labels on things, sorry. Steve, over to you.
Yeah, I guess if the last 2 years are anything to go by, what I would like to see is my family in my bed. But I think it's pretty much what you've said. At the end of PEM, I think I'd like to see a less dichotomous South Africa where digital payments are the go-to form factor, for more than just those of us who shop at Woolworths.
Sure, that's a powerful headline statement as well. Pradeep?
And in my case, I actually formally would finally be retired.
Is this recorded?
Huh?
Is this recorded?
Yes, this is all on video.
I've had 3 jobs where I designed a job for myself that actually had an end date, and I actually would then keep to that. Now, one way I can pay a car guard digitally. They can use that to pay the roadside vendor, the taxi driver, the retailer, the spaza shop. That Lincoln and all the other entrepreneurs that are in this room design products and services for that person that allows them to move up the value chain.
Yeah.
That you see the social development that comes on the back of that, and you see the economic growth that this can power. A country that starts to bridge the gap between the formal and the informal. A country that starts to bridge the gap between the inequality that exists in this country, and that we can use payments to bridge that gap. We can use digital financial ID to bridge that gap and act as a catalyst for a country that looks very different to the one that we have today. And where hashtag 200 has been changed to hashtag 500.
Pradeep, I'm going to promptly break my own commitment from 3 minutes ago and add one last comment, because I think what you've hit on is really what this is all about. It's about the interests of the economy and the interests of the people in South Africa. If we can hold on to that, I think we've done a great job. Thank you, gentlemen. It's been very entertaining.